Hey there, folks. Joe DeMarco here, NRL Mortgage. So today we're going to talk a little bit about the world of mortgage bonds and why it feels like we're sailing against the wind lately. Have you guys been wondering why rates haven't improved even though inflation is coming down? Well, let's break it down together for you. Let's start with a little bit of recent history. Remember back in 2021 when inflation was on the up, but mortgage rates weren't climbing as expected? Well, guys, that's because the Fed, our nation's central bank, they were buying up tons of mortgage bonds and treasuries, creating somewhat of a safety net for interest rates. So now let's forward a little bit to today and what's going on. Inflation is coming down, which would usually mean rates also drop. But here's the twist. They're not, and why? Because the FDIC and banks are selling off bonds like hotcakes. This heavy selling is applying a lot of pressure on the bonds and counteracting the effects of decreasing inflation. Guys, think of it like a storm. It's temporary, right? It's a temporary situation, and we just have to weather it. Once it blows over, the fundamental economic forces like inflation, which is dropping, will take over, right? So now, a little bit about our Fed, right? Even though some of the big guns like Fed President Bullard and Logan, they're saying that they want to hike rates again, Fed Chair Powell hinted that we may not need to increase rates as much due to the credit stress. In fact, the odds of a rate hike on June 14th have actually dropped dramatically to about 20%. But what's important to remember is this: the Fed's decisions, they're not always set in stone, right? They're like sailors navigating the economic seas, always dependent upon the data that they have at hand currently, right? The catch is this, guys: the Fed sometimes gets outdated data, right? This is a mismatch, partially why we ended up in the inflation mess that we're in today. If the Fed had accurate data and acted accordingly, we might not be in this mess that we're in. We would have dodged a bullet, right? In the world of mortgage bonds and rates, there's no sure bet, guys. The market is as dynamic as the weather, changing with every gust of wind. The key is to stay informed and be prepared. That's it, all right? Stay informed and be prepared. That's it for today, guys. Hopefully I shed a little bit of light as to why mortgage bonds are doing what they're doing, why interest rates are doing what they're doing. Although we had some good numbers that came out back in May 10th. They weren't as great as we expected, but we all believe that we're heading in the right direction, and we will see interest rates at some point over these upcoming summer months come back down and give us all a little bit of relief. All right, guys, if you have any questions, you have any concerns, you want to talk about rates, you want to talk about mortgages, please feel free to reach out to me. This is Joe DeMarco, NRL Mortgage, a.k.a. Not Your Average Joe. Have an awesome rest of your day.